Hi, it's Brian Shannon from AlphaTrends.net. Today I just wanted to take a quick look at some downside potential areas of support for these markets. We're still obviously in these real painful downtrends. As I said yesterday, below a declining 5-day moving average, you don't want to trust any rally attempts. The market's guilty till proven innocent and was likely to go down and test at least the 105 level. We're looking at a weekly time frame. You can see here that based on the Fibonacci retracement of the March 2009 lows to the recent highs, that would bring us down right about 101 area. And that's also where we had seen resistance form in late 2008. So there's a lot of talk about 102, 103, but I think that the market can easily get through those levels and down towards that 101 area before it is likely to find support. Still not an area to buy, but an area to look for maybe some buying if we get further panic selling in here, which is what it seems like we're getting. The NASDAQ has not come down to its January lows. A lot of people looking at that level as maybe support 4250. I think that you have this support from late last year, which is also 38.2% retracement of this larger move. So I think down near about $41 a share seems like a more realistic downward objective. On the Russell 2000, we're looking at kind of the same thing, that 38.2% retracement. And these Fibonacci numbers aren't meant as any kind of magic or anything, but when they line up nicely with other prior levels of importance, such as resistance here and support there, they kind of bring us just a little bit more clarity as far as where the sellers may stop selling and where other buyers may start coming in and nibble on this market to create that support. So there's people who are looking at the Russell 2000, for instance, and talking about this as support. I think, though, that it's more likely that we undercut some of these shorter term levels and drop down towards those 38.2% retracement areas. You can see the same thing in the semiconductors, that they look like maybe they could head down towards this 24.5 area. That has been a pretty big level of support over the last year as well, so that seems to add some credibility to that level. And then the financials, we have a pretty easy to identify level of support right here, and that's about $13.50. Now what happens a lot of times is that we get a shakeout below these important support levels that so many people are watching, and then go down to the next level, which would be about $12.80, which, if you remember from last year, was resistance for quite a while, and that's where this market really got that upside momentum developed late last year. But I think 1280-ish area looks like a more reasonable area that we could expect the financials to drop to. These are just areas to consider, not an area to buy. What we want to do is watch the action more carefully for support in there. Until then, these markets are guilty till proven innocent in just about every single time frame. They're below all the declining moving averages.